$1,000 a day for 1,000 people, which is $1 million in a single day. Whew. Believe it or not, you cannot hustle your way to wealth. In today's video, we are going to talk about something we should have talked about a long time ago, because this is literally the only way to get to the biggest bag. Remember about 10 videos ago, I asked you if you wanted me to make a video about investing in the stock market. Over 1,000 of you literally said yes. More often on this channel, I talk about side hustle ideas, how to make money online, because that's what most of you seem to want. But as an accountant and a certified financial education instructor, honestly, I have way more to give to you than side hustle ideas. So in today's video, we're gonna talk about investing in stocks, because this is one of the ways that the girls can become rich girls. And before you click out because you think this is complicated stuff, it's not. I'm gonna break it down in a way that's popping. First, we're gonna talk about what a stock is. Then I'm gonna tell you how stocks actually make money. And at the end of the video, I'm gonna tell you the easiest way and the way that I invest in the stock market. Are you ready?
She ready.
Okay. Let's get into it. Number one, what is a stock? I'm not gonna bore you with a textbook definition. Let me break it down to you like this. Imagine that you own a bomb lip gloss business that costs $10,000 to run. However, you have just $1,000. So you've been able to make a few lip gloss samples, you've set up your TikTok page, you're ready to hit the market, but things are not growing as fast as you want them to grow because you don't have the $10,000 you need to run the business, like to pay for marketing, to hire staff, to pay for operations. So you go to 9 family members to ask for $1,000 each. Now that everyone has brought $1,000 each, you have the $10,000 you need to run your business. Now here's the catch though. There are always strings attached, right? You no longer own 100% of your business. Each person owns 10% equity. That's the word, in your business. But you don't mind because you know with that $10,000, you can turn the business into a 6-figure business. Large companies like Apple, Tesla, Microsoft, Coca-Cola, McDonald's, they also need money. But they don't just need $1,000. They need millions, sometimes even billions of dollars to run their businesses. So they make the shares available to the public through something called an initial public offering, or IPO. So they go out to the public and say, hey guys, hey everyone in the world, including you, including me. They tell us, yo, come buy a little tiny piece of my company and you can own that little percentage of the company. So when you buy a stock, you're basically giving a company money for a little piece of that company. Some companies' stocks sell for as low as $20, some sell for over $3,000. But why would you want to spend your money buying a piece of a company? Is there even a way to make a lot of money from this? Yes, there is. And that brings us to point number 2. Point number 2, how stocks make money. There are 2 ways that stocks can make you a rich girl. One is through capital gains. The second is through dividends. Now let's talk about capital gains. Capital gains is literally what it sounds like. Gains on your capital. So when you put money into a stock, if you're able to buy the stock at a low price and sell it at a high price, the gain that you get is called a capital gain. If capital gain is the way you want to make money by investing in stocks, then you want to make sure that you're buying low and you're selling high. A lot of amateur investors don't know how to time the market, and I love that more and more people of color, women of color, are beginning to talk about this. My favorite person who does this is a woman called Terry. She literally was a teacher, but as soon as she learned how to make $1,000 a day in the stock market, she started teaching people how to make $1,000 a day as well, with the goal of getting 1,000 people to $1,000 a day.
Because if we have 1,000 students make $1,000 in a day, that's $1 million generated in a day. And if we are able to make $1 million in a day, what kind of impact could we have on the world?
Did you hear that? The second way is through dividends, and this is my all-time favorite because this is one of the ways I make passive income. Remember that when you buy a stock, you own a little bit of the company, and as a proud owner, when the company does well and it makes profits, you have to collect some of that profit. Just the same way your family members will come and ask for your money if they give you $1,000 each. You also, as an investor, can sit back and receive checks in your bank account each time dividends are paid if you invest in dividend paying stocks, because not all stocks pay dividends. If you want to see a full video about dividend investing because you want to get started investing, then let me know in the comment section. I'll be more than happy to make that video if you watch it. So let me know in the comment section. While dividends are really nice to receive, not all stocks pay dividends. And that brings us to point number 3, types of stocks. Technically, there are different kinds of stocks, but broadly speaking, we have blue chip stocks and we have growth stocks. And the type of stocks you decide to invest in would depend on how you want to make money in the stock market, whether or not you're a short-term investor or a long-term investor, what your risk tolerance is, and what your goal for investing is. These are things that you have to factor in to decide which one you like. But a blue chip stock is a stock of a very established company that's been around for a while, and because it's been profitable for a long time, it can afford to pay its investors dividends. And that's why I love me some blue chip stocks. Now, you also have growth stocks. Growth stocks are stocks of companies that are still in the growth phase. They haven't been around that long yet. And the prices go up and drop and up and down. And there are people who get excited about stocks like this. Today, it's $1,000. In 2 days, it's $3,000. They're usually very volatile. They're the ones that make a lot of people say, buy the dip, buy the dip. And sometimes the dip even goes deeper. But if you're a new investor, you don't want to get carried away with this, because a lot of people have lost money by trying to chase capital gains when they're just starting out. Which brings me to number 4, the easiest way to get started investing if you are a new investor. Now, you might have completely stayed away from the stock market because you think it is risky. And you're not wrong. There is a degree of risk with investing in general. However, that risk can be minimized through something called diversification. And what diversification means is don't put your eggs in one basket. Think of investing to build wealth like dating to get married. If you date only one person, you might end up with a broken heart. But if you don't go on any dates, how would you find your husband? So in life, the best things require a degree of risk. But what you want to do is minimize your risk to the barest minimum. And the way to do that is by diversifying, which means don't put all your eggs in one basket. And if you're a new investor, you have no business buying individual baskets anyway. And what I mean is that it's riskier to buy individual stocks, because if you buy one stock, if you put all your money in one stock and the stock goes down, you lose all your money. But if you put your money in a bundle of stocks, one stock might go down, one stock might go up, but either way, you're balanced out. But if the market is going up, your money will be going up with it in general, no matter what's happening to any individual stock. And that's why I love index funds and ETFs. And let me explain what those are. Don't panic about any word that I say. I've already told you I'll break everything down to you. You must win. We're all gonna win, okay? Listen, an index fund is a collection of stocks that track an index. An example of an index is something called the S&P 500, which is the stocks of the top 500 companies in the US. Now, think about it. Would all 500 companies that are at the top fail at the same time? If they all fail at the same time, then we're all going to the dumpster. We're all going to the mud. Unless Jesus is about to come right now. Like, how is the entire stock market going to fail? It's been consistent for almost a century. That's my philosophy. That's why I love index funds. They track indexes that have been consistent for years, for decades. We also have ETFs. And you're like, what does an ETF even mean? It means an exchange traded fund. So it's basically a bundle of stocks as well, but it doesn't track only indexes. It's literally any kind of bundle that you want. There are tech ETFs, there are communication ETFs, there's hospitality ETFs, there are even ETFs of index funds. So basically, a smart woman who's a fund manager is somewhere engineering these things and putting stocks together that are diversified in some way into different bundles so that you and I can buy them for low prices. And that's why they're my favorite. Now that you understand exactly what a stock is, the kinds of stocks that exist, and how to make money with stocks, in the next investing video, I'm going to talk about how exactly to get started investing in stocks, what to look out for, what apps I use, whether or not I use a traditional brokerage firm or whether I use fintech, and what I think the pros and cons are. and I'm just gonna spill all the tea. It's probably gonna be titled How to Invest for Beginners, or How to Invest Your First $100, Investing for Beginners, or something like that. So if you don't wanna miss that video, go ahead and hit the subscribe button and hit the bell so you get notified when I make that one. Remember that I'm always rooting for you. I'll keep showing up with as much value as I can, so please don't stop rooting for yourself. And until next time, please take care.